Hi, this is George. Let's continue this video from where we left in the previous video. So I'm just going to introduce you to new terminologies. With that, we will continue with that. So first is intrinsic value. So intrinsic value is nothing but you can just have it the theoretical formula like a spot minus strike and or else zero if that goes to negative value. In our case of IPL bet, it is score minus strike, and PNL is maximum of zero or intrinsic value minus that. Sorry, PNL is the intrinsic value minus the premium paid. So we will see the recap of where we left the previous video. We had the scenario where there was a SRH scoring 50 runs in 5 overs was our kind of target or the contract, where 50 runs is the strike price and the premium collected was 1,000 rupees. And this is something I'm just introducing you here, like whatever is like if they are scoring one run above, you will get 200 rupees. So if they score 51, the thing is like you will have 200. If they score 52, it will be 400. If they score 60, it will be like kind of 200 into 10, 2,000. If they score 70, it is 200 into 20, 4,000. Similarly, it will be like that. Similarly, for the Nifty, the actual thing, for every 1 rupee increase, you will get a premium pay. So 24,500 was the example that we took, for which we paid premium of 70 rupees. So each and 1 point it increases above 24,500, we will get 1 rupees. So if it ends at 24,550, we will get 50 rupees is the intrinsic value. So this is what it is. So let me see what will be the intrinsic value in net PNL. So as I said, like say suppose if SRH is finishing on 60, in that case intrinsic value is score minus spot, score is spot minus strike. Strike was 50, score is 60. So 60 minus 10 is 10. So 10 into 200 is 2,000 rupees. So premium that we already paid is 1,000. So PNL is intrinsic value minus premium. So it is 1,000 rupees is the profit that we are making. Similarly, for this, when Nifty is ending at 24,600, it is 100 points above the strike. So already we paid 70 rupees. So PNL is 30 rupees. And similarly, if they are scoring at 70 rupees, 70 runs is scored by SRH, then it is 4,000. As I said, like 70 minus 50 is 20, 20 into 200 is 4,000. And premium paid is 1,000. So what we are making is 3,000. And similarly, here say suppose if Nifty is ending at 24,800, 300 points over the strike, and we have paid 70, so PNL is 230 rupees profit. Similarly, if SRH doesn't score 50, if it is going anywhere below 50, it will be zero, and the maximum loss that you will make is the premium that you paid, which is 1,000 rupees. Similarly, if Nifty is ending somewhere below 24,500, max loss you can make is 70 rupees. So now this is the buyer side. There will be always two sides of a coin. So say suppose if you are a seller, in that case, say if SRHS finishes at 60 score, then you will lose 1,000 rupees. Whatever the gain that was done by buyer will be the loss for the seller. So similarly for this, it is minus 30. It will be the exact replica of what you saw that time. So now one thing that we need to understand is there could be many scenarios or many possibilities of the event not triggering. So SRH, if it is always like you can take anywhere a strike, like as I said, OTM strike. Instead of 5 overs 50, you can bet even 5 overs 80 runs. So in that case, the probability will go lower. So even you can bet there, and maybe your like a premium or the bet that you keep is 400 rupees, and 5 overs 80 runs is something hardly like once in 100 matches it can happen. So in that only in that scenario you will lose, or else every other time you will make 400 rupees profit if you are a seller. Similarly for here, like when market was at 24,000, we were betting at 24,500. So there was always so many chances like market could stay only at 24,000, or it could be like from 24,000 to 24,500 as you thought it will be bullish, or even it could become bearish, like it can go below 24,000 or it can go above 24,500. So there were so many scenarios favoring the seller side. Like if you are taking like out of the market thing, so there will be always a seller who can make more money. Not I will not say more money, more probability of winning than the actual money. So the thing is like buyer will be like winning less often, but when he is right, he can win a lot. Say suppose here in that case, when we said 24,500, say suppose market goes to 24 instead of 24,500, if market goes 25,500, it will be 1,000 points. and you have paid only 70 rupees and you got 1000 points, means 1000 minus 70, it is 930. And it is not like exactly rupees 930 rupees. A Nifty or Sensex will always trade in lots. So the current lot size of Nifty is 65, and this changes every year or a few quarters once. So now you have to, what initially you would have paid is 65 into 70, whatever may be the amount. And similarly, what you are going to finally receive is 1000 into 65. So that much of profit you'll be able to get. But on the seller side, maximum you will get is, so as I mentioned here, you will keep. Once you sell, immediately you will get money. It's not that only at the end of the thing, like buyer side. So once you sell, you will get money. So that is how seller. So in general, seller wins more often, or the probability of winning is more always for seller. And when he is wrong, theoretically it can be very large, because maximum he can collect is 70 rupees. And in this case, as I said, he can go to loss of 1000 rupees. So if it is goes to minus 1000, it is a unlimited loss. Actually, it can even go to 29,000, 35,000. So that is, in theoretically they say it is like max loss. But there is always hedging technology, hedging strategies, or maybe you can put a stop loss. So many other things are there to mitigate the losses. But these are something that you need to know. So when you say that the probability of a seller is always more on the winning side, then why people are always many people are buying than selling? The reason is because for a buyer, for him to buy, all he needs is only the premium. So in that case, like when I said 70 rupees, 70 into 65, maybe hardly 4000 or whatever. That is the amount that he needs for buying. But for selling, there is always a margin requirement. So let me take you to a name. Like I trade in Zerodha, and again, I'm not saying that you can trade in Zerodha. It's totally up to you. Each broker will have a different margin requirement or thing. So here, this is Zerodha margin calculator. In this I put F&O options, and this is Nifty expiry for this 28th, which is Tuesday of coming week. This is what we thought. We had saw the example. So now, as I said, like quantity will be always like in lot size is 65. So it can be 65 or multiples of 65 only you can have. So what we saw is 24,500 only we were selling. So now say just we are selling this, you need margin of 1.4 lakhs. But say suppose if you are buying, it will not say any margin. All you need is the premium amount. So that is the reason where is 4,000 and where is 1,40,000. This is where the picture comes in for seller. So seller is someone who has money, who can bet, and who can take the risk, and who will mitigate the loss if something adverse happens for him. But buyer on the other side, retail traders, they just think it is gambling and they just bet on that. If there is a profit, they'll take, or else they'll say, oh, today is not our day. So this is not luck-based theory thing anymore. This is always, there is a strategy, there is always a logic behind it. So generally in market, sellers make money. So again, I'm not saying that be a seller. So many people in buying also they are making money, but by understanding the chart, so many things, so many concepts are there. But to be honestly saying, seller is someone who doesn't need to know so much, is what I would say. This is again my personal perspective, because for a buyer you have to be timing everything right. As I said, like even when you are betting at 24,000, you are saying 24,500, even if it goes to 24,480, you will end up in loss. Though your direction was right, your momentum also was right, but it was not that much of momentum that you expected. But on the other hand, seller will always make money if market can either be a range bound or it can be trending. And in a trending market, it can either be bullish or bearish. So totally we can see there are three scenarios. One is range bound, one is upward, one is downward. So even in this scenario, if you see, out of the three scenarios, if it is range bound or if it is downtrend, the seller is making money. Even if it is uptrend, it has to go so much beyond that 500 points for seller to lose money. So you can see the probability of winning for selling than for buying. So now, as I said, like 1.42 lakhs is needed for buy selling. There is always something called spreads, that hedging technology, hedging strategy, where if you buy one strike above this, your margin substantially goes down. So now the total margin is required is only 37,000. So from 1.42 lakhs, 37,000 has come. But similarly, the ROI, everything will alter accordingly. So that is one thing that we need to understand. So let me go back to this. So that is the reason, like always it is. And one more thing is, like when you are going to be a seller, when you are planning to be a seller, you can always pledge your stocks or your gold bonds or your whatever, like government bond, treasury bonds, anything that you buy from your demat account in a secondary market can be pledged. So what is pledging? Again, I'll go to Zerodha's example. There is you can download it from Zerodha. Like you can see like what are the approved securities that Zerodha allows for margin thing. So here you can see like there will be a haircut. They'll say like a 10% haircut, 20% haircut. So for the minimum haircut, it will be kind of usually government bonds kind of, or it is like a liquid fund which will not give more returns, but these are like safer things. But when you see the things which are like more than haircut of 20%, this will be mostly like a kind of equity driven thing. So where there can be from mid cap stock or large cap stock where market can move adversely with the movement of the stock prices and market movement. So haircut is nothing but, say suppose if you have 100 rupees of whatever this liquid be, 94 rupees can be used for your margin pledging. So say suppose if you as I said like you want 1.42 lakhs for selling one option of Nifty. If you buy 2 lakhs of this thing, whatever it is, so 200 to 2 lakh, in this only let's say 10%. So 10% will be taken as haircut and you will be given a margin of 1.8 lakhs. So all you need to do is you just buy this wherever haircut is 10% or so. This is a liquid fund which will give at least 4-5% a year. You pledge this, you will get 4% a year, and also with this 1.8 lakh, you can do one lot of selling in Nifty options weekly, which is on Tuesday, and again with the same amount you can do option sellings or Sensex, which is on Thursday on the expiry day. Usually expiry day you can become more profitable, but the risk is actually more. So whenever I say there will be, you can make more money, same way you can lose more money. So that is something that you should always know, because always when there is risk only we can make return. So whenever I'm saying there is a possibility to make more return, then there is always a possibility to make more losses. So this is the best part of pledging and doing option selling, because you need not take any specific money only for this. You can put it in, maybe if you are already a trader, you would have bought so many of the quality stocks, which again have a haircut of 10, maybe 10-15%. That you can pledge and you can do. And you can, if you're a buyer of gold, there are SGB, so sovereign gold bond, which has stopped now, but still trading in secondary market. It will be trading till 2032. And or else you have gold Bs, you have silver Bs, which are always there in the market. That also you can buy and you can pledge that and you can sell. So this is kind of you can make money if that asset increases, as well as with that margin you can trade and you can make money. So when I say that you can pledge and you can do, it doesn't mean you can ever take a loan or you can pledge your physical gold and you can do. So whatever, if you're planning to do options trading, the thing is like you should be always having a primary income, and this will be your secondary income. Don't ever believe that this is going to be your single source of income unless and until you are so proficient. So as I said, like I'm already 10-12 years of experience in market, but still I'm not a full-time trader. And I initially intended to become a full-time trader, but not anymore with the invent of algo trading. So all I do is, as I said, it's a kind of passive trading. I just have to click few buttons before the day, like 9:15 starts, and everything is done on its own. And maybe by the end of the day or end of a week, I can just sit for an hour or two and analyze what has went well and what has went wrong. I'll just mark it in a journal, and I'll research and I'll try to improve whatever was not working well, and I'll continue to do whatever is doing. So this is simple and logical, but I will not say it is so easy and it is like kind of everybody can do. It's not everybody's coffee. So just have a look at it, and if it is possible for you, please go on. So just a recap for this. So capital needed for buyer was always lower, whereas seller is always higher, and win probability is lower for a buyer and it is always high for seller. Max profit is uncapped, as I said. Like if market goes so much beyond what you paid for, you will get handsome money. Like the return will be like, even it can be 10-fold or 20 folds. But in seller case, it can be always capped. Whatever you are selling and the premium received is your maximum profit. With that, you will be like spending for brokerages and other STT charges. So your profit is always capped. And max loss, just opposite to it. It is capped for buyer, whatever the premium he is paying. But for seller, it is theoretically it is unlimited. But you can use hedging strategies and mitigate the losses. So this is just for a educational purpose, and I will never give any recommendation to do this or that. I might from next video I'm planning to give some strategy, which is like I'll just give a generic strategy and which you can use and you can alter and you can do whatever. It will not be like kind of a stringent rules that this has to be followed or anything. It's totally up to you. However you want, you can utilize it. So as I said, next video will be on some strategy. So see you in the next video. Thank you.